David, when you look at Deutsche Bank, so you don't own any Deutsche Bank.
We don't own Deutsche Bank.
What would it take you to actually go in and buy some? Does a report that JPMorgan, if it's confirmed, is looking at it, make you want to take a second look at the bank?
Not really. We've looked at it. There's a couple problems with Deutsche Bank from our viewpoint. So we need some better transparency in financials. So much of their profits from the global market business, they're not so strong. I mean, they have a wide spread of global markets businesses, but, there's also other strong players, Goldman Sachs, Credit Suisse, et cetera, UBS, Morgan Stanley, et cetera. Number two, in their home banking market, of Germany, it's very, very difficult for companies to make money in retail banking because of the Landesbanken. So even in their home market, their core business should be, to some degree, part of their core should be retail banking, and they can't make money there. No one can make money in Germany's retail landscape. You could make money in commercial banking, but it's hard in retail.
But so what should Deutsche Bank become?
That's a good question. I mean, our view is look for businesses, and where we're exposed. A company like Credit Suisse that has a good wealth management business that's growing. It's exposed to Asia. They have what we call a reformulated global markets business, trading at 7.5, 8 times normal earnings. So why look at something like Deutsche Bank that is more opaque on where they make the money, when we could look at something like Credit Suisse, where we see this improvement and there's a lot more visibility, and at a very attractive price.
David Herro, you and I know that Mr. Diamond has a collective memory of acquiring other assets on the cheap, sometimes at gunpoint. That would be called Bear Stearns. Now, he's not at gunpoint now. I get that. But if it comes out that there's actually a strategic interest in JPMorgan here, explain the why Mr. Diamond would be interested in affecting some form of ownership of this German national bank.
I would really hope that he didn't get some form of ownership, because I just think, by the way, if you look at JPMorgan's business, it's so strong and getting stronger. And why ruin that? Why, steal defeat from the jaws of victory? And they don't need Deutsche Bank. There's nothing in there that they don't have in mind.
But on a book basis, I mean, just a quick look in the book, it said 0.33 is one measurement a book. I mean, the fact is Mr. Diamond could buy this thing on the cheap, bring the New York operation into JPMorgan, and then he could turn around and help the German government move this turkey forward. I mean, isn't that the way this works?
Well, you'd have to look at the cost of integration and what it takes and the harm it may cause and what businesses they have to give up, et cetera, et cetera, et cetera. So, yeah, sure, on paper it looks like if, in fact, Deutsche Bank is really trading at a third a book, that is stated book. Are those assets really worth 100 cents on the dollar? I mean, it's like a Chinese bank. Are those assets worth 100 cents on the dollar? I mean, here's a chart. I'm not comparing Deutsche Bank with the Chinese
Here's
bank.
a chart where we are now, folks, and this chart is not of the Milwaukee Brewers, David Herro's team, but rocketing up Deutsche Bank in the 8-9 level, as Francine mentioned, touching 10. And then very quickly here, I'm going to do this in real time, folks, just like we do on the Bloomberg. I'm going to do a quick long-term chart of this turkey, and you can see the rollover and collapse of Deutsche Bank. All you need to know, folks, is that's an elegant chart and really shows how Mr. Herro's been correct not to own this dog. Okay, so they own it, but the fact is they come with a lot of real estate. Would you suggest that Mr. Diamond, like with Bear Stearns, is just acquiring real estate here?
Well, that's what would be happening, and I'm sure there are some businesses that were complementary that they can meld into each other. There's others that they'd probably want to sell off, but if Mrs. Merkel and the Germans really want to help Deutsche Bank, do something about the retail German banking market and the Landesbanken. Italy did it, Spain did it, all these other places have done things to make the market more balanced. And one of the reasons I still assert that Deutsche Bank is half crippled is because they have to compete in this retail banking market in Germany where it's almost impossible to make money because of unfair competition.
David, when we started asking you about Deutsche Bank, you immediately said, well, why would you look at Deutsche Bank if you can invest in Credit Suisse? Have you been buying up more Credit Suisse shares?
Well, as you know, we never discuss what our current trading is, but if anything, if you look at the last couple quarters, last year or so of Credit Suisse earnings reports, they just continue to improve, to strengthen their business. The key theme of Mr. Tiam's business transformation has been to take some costs and be more efficient in the investment bank and put more focus and capital allocation in the private bank. And this has worked. This is actually working, and you're starting to see much better results. In the meantime, this business has just continued to be derated, and we think it deserves a substantially higher rating. 7.5, 8 times normal earnings is where it trades at. It should be in the low double digits. It should be 12, 13 times, given where their business exposure is today.
Should they further scale down their global markets unit?
They should only scale down if they're unable to make through-cycle profits. They shouldn't just get smaller to get smaller. But what we hope they do, and I think they're doing a pretty good job at it, is examine where you could make good through-cycle profits, keep those businesses. In fact, you maybe build those up, maybe you make those stronger. And areas where you can't compete, where it's tough to compete, back away from those businesses. That's kind of business 100.
So what do you prefer, Credit Suisse to UBS?
We do like the valuation differential, which is huge between the two. And, you know, they're not wildly different. There are some differences when you look at UBS and Credit Suisse. I think Credit Suisse will be getting more of their income, private bank income, as a percentage of total from Asia, and where they have a very good. UBS is pretty strong there, too. And UBS isn't a bad business. It just trades at a substantial premium to Credit Suisse when we think it's somewhat undeserved.
David, I want you to give us some wisdom here on strategically how a busted company, in this case a busted bank, turns it around. Bring up the chart again on Deutsche Bank. This is an extraordinary chart of failure going back to 2008. I look at the moving averages here, folks, and all you need to know is this is a beyond elegant chart. The mathematics of this chart, the time series order of this trend is just shocking. David, how do you reverse this horrific trend if you're Mr. Saving and you want to do right by the employees and right by the shareholders?
I think what someone has to do, what the leader of this business has to do, is carefully comb through the various business segments, the various business areas, and see where do they have a competitive advantage and why. Where is there a moat? And where these businesses are, you have to bolster these businesses, invest in these businesses via proceeds of selling off businesses which you're not so good at, where you do not have critical mass. So you have to really retrench into those areas where you have a strong business franchise. Now, I haven't gone through Deutsche Bank with a comb, but there must be some areas where they're strong. And you just have to keep going, looking until you find those areas where you're strong, trim or sell the areas which you are weak, and kind of start from scratch again. You can't be all things to all people. Businesses who do that please no one.
I'm going to jump in before you get another Deutsche Bank question. Are you worried about compliance procedures at Julius Baer?
Julius Baer has, been under the microscope ever since their CEO has left. There's been some rumors that one of the reasons why he may have left. There's so far been no verification of this. The person who is now the CEO of Julius Baer was the Chief Compliance Officer, and I think that they have a firm grip on compliance. Julius Baer is only now a private bank, a global private bank. In fact, they're doing fairly well. But, in the area of private banking, Swiss private banking, compliance is extremely important. You have to know your client, and you have to make sure you have wealth managers who aren't just bringing in money from anywhere. And I think Julius Baer has a grip on it.